Analyst Tim Ord. Man, happy Christmas. Merry Christmas, Happy New Year. I haven't spoken to you in a while.
Yeah, I've been sick, and I'm back on the mend, so I'm feeling good.
Good. What are we taking a look at? I know there's a lot that's happened since we've spoken last.
Yeah, it's kind of, let's take a look at the market here. Let's go to chart 1, and this is kind of not a good sign for 2025, but anyhow, chart 1, the second window up from the bottom is the 63-day average of the ARMS index. So that's all it is. Now, I've been saying over, I guess, months now, if not even longer, that when the trend gets above 1.2 on a closing basis, that shows panic. And the more panic days you have, the more actually bullish that situation becomes. And also the opposite happens too. When the trend gets too low, that's actually bearish for the market. The trend, the definition of a trend is the advancing issues over the declining issues. Divide that by the advancing volume over the declining volume. And so what it measures is the volume going into advancing and declining issues. So high volume on declining issues is going to drive the trend up. Low volume or high volume on the advancing issues is actually going to drive the trend down. So anyhow, anything above 1.2 on the trend on a one-day basis is bearish. The second window up from the bottom is 63 days. So that's like 3 months of trend readings. And so when that gets down below 1.0, which I noted those times with shaded pink areas, and this chart goes back to looks like about July of 2017. But all those times when that trend gets to 63-day trend gets below 1, I shaded in pink, and all those times came near highs, at highs or right at the highs, whatever. Well, we've been hanging. The 63-day trend has actually been below 1. Looks like since probably about November or so. We're probably in a topping area is what's happening. Matter of fact, they did a good job in picking out the 2022 high. If you look back in 2022, it pretty much came at the highs. So we kind of have a similar situation. So 2025, with the trend still below 1 right now, it's not a good sign. So I'm thinking this year could be, I don't know, a difficult year, I'll put it that way. It's not going to be trending like it was over the last couple of years. So it's going to be, a straight down market, or at least a sideways trading market. Not sure which one's going to happen, but it's not a good sign. So it's bearish. Basically, I say 2025 will it be an up year or down year? It's kind of hard to say, but if it's going to be up, it's not going to be up much. If it's going to be down, it could be down quite a bit. So I'm not sure which one it's going to be. So I'm kind of playing close to the vest as far as my trading goes. So I'm not pushing trades. If I see some bearish signs on my long trades, I take them off pretty easy. Matter of fact, we did sell out yesterday on our long position. So I'm back to neutral. So let's flip to chart 2, see kind of what's going on. Chart 2 is a Zweig breast thrust indicator. For short, that's a ZBT. And the Zweig breast thrust indicator, the definition of it, which is at the bottom window, is advancing issues over total issues. This is on the NYSE, and you take a 10-day average. And the thrust down is a reading below 0.4. That initiates the trade, I guess you might say. Then it has to go to 0.6 within 10 days. If it does it, that's usually a bullish indication for the market, because ZBTs only happen in bull markets. We did have a ZBT reading below 0.4 here in late December, and so far it has not got above 0.6. And I doubt it will. And it's actually been more than 10 days. So that's another sign. So this indicator only triggers in bull markets. We failed to trigger on this last one up. So it didn't market did not follow to the upside. So that's kind of a bearish sign, saying that if we can't get a bullish ZBT here, then it just kind of reinforces the idea with the 63-day average of the trend not giving bullish signs here too. So we got a couple of different signs here that says 2025, even though Trump is getting in and everybody's bullish about what he's going to do to the markets, the market's internal suggests something different is going to happen. So I'm thinking the market's probably going to wait and see what Trump actually does. And maybe this bearish stuff we got right now may resolve itself to bullish. But as it sets right now, I'd be careful on the long side. Otherwise, if I see panic, I'll trade the panic, but probably trade out on any rally. So 2025, so far, it doesn't look good.
That is absolutely the way I'm kind of looking at it, at least in this short term. And maybe things, do resolve if his behavior becomes a little bit more apparent, right? Like with having Trump coming in. But
that's why I'm hoping for. I don't know if that's going to happen or not. But
same. Well,
we'll
Tim,
have to kind of wait and see.
Yeah, absolutely. Tim, please stay right there, folks. We'll be right back with Tim Ord of the Ord Oracle right after this break. We're joined right now by Tim Ord of the Ord Oracle. Of course, Tim comes on every Tuesday and Thursday. Certainly recommend checking out his website. That is ord-oracle.com. You can check out the newsletter, his book. You can contact him via that. And then additionally, you can go to TFNN.com and on the services tab. We have 2 fantastic webinars. That is the Secret Science of Market Tops with Tim Ord, and then 6 secret ratios every trader should know. Now, of course, Tim was just talking about that we might be making a tapping pattern. If you kind of want to get some more insight into how he determines that, I strongly recommend checking this out. If you do so, send us an email. We'll get you some access on that. Tim, before we went to the break, we were looking at basically some kind of bearish indicators for the market going forward.
Right, ZBT, Zweig breast thrust indicator, wanted to say to get that triggered, you need a sign of weakness, which is a reading below 0.4. And within 10 days, you need a sign of strength, which is a reading above 0.6. It's been 10 days since we got the reading below 0.4, and obviously we're not going to. We didn't get the ZBT we're looking for. So that suggests there's no strength in the market as far as advanced decline is concerned. So let's go look at the short-term picture, see what's going on. Let's go to chart 3.
Absolutely.
And I did get a buy signal here a week ago. I have some trend readings there. I labeled, forgot what day it was, but we had panic trend closes, and I noted 2 of them there. One was 1.64, and another one we had 1.33, and so that's one of the reasons why we got long at that last low around that 580, 585 on the SPY. Well, yesterday we ran into the gap, which I have shaded in pink there with the gap in blue. Actually, yesterday's high, we ran into that gap. If you compare the volume into that gap was much lighter. And if you run into a gap, it's like running into a previous high. You need volume at least equal, if not higher, going into a gap or a previous high. If it does, if it's 10% greater or 20% or more or less volume, that gap or previous high is going to have resistance. And that's exactly what we had. That's the reason why I got out yesterday. So where are we? We're going to go? Well, I didn't. There's a gap. I wish I could do online graphics here, but I just noticed when I was doing some other studies. But if you look in early November, that rally off that low, you see a huge gap. It starts around 575 and it goes up to close to 585. You happen to see it, Jacob?
Yes.
All right. Well, if you shade that in pink all the way over to the current area, we actually never closed that gap. That gap is still open. So to close the gap, the market would need to go down to 575. And I think that's probably where we're going to go on this trade on the current pullback. We're not going to stop at the previous highs of 580. We're probably going to slide all the way down to 575. What happens from there, I don't know. So it's a bunch of gobbledygook in the market. The market really hasn't moved much since basically November. We're kind of sideways move. The market made a new high, in December, then fell back down in late December, kind of tried to rally, and early December, January, tried to rally here, couldn't rally. So the market, I think, is building a top pattern here. Definitely. And if we get down to 575, it depends what the volume is, but volume is actually pretty heavy. Volume goes in the direction of the move. So if you see high volume on declines, that's the direction the market's going to go. If you see high volume on or when the market's rallying, that's the direction it's going to go. And right now, if you compare the volume, if you look in late to mid-December, or mid-December, you see a big spike in volume there. Yeah. That's a lot of energy to the downside. We did have one spike up in volume to the upside off that low, but the volume quickly decreased. And this last decline going into last week's low, the volume comparably is pretty high. But if you then again compare the volume up to the last couple of days into yesterday, the volumes actually went light again. So the volume characteristics, just eyeballing it here, leans bearish. So
definitely.
Anyhow, it's not a market to be long in for long term. I'll put it that way. If you get a decent profit, I'd take it.
Definitely. And, talking about, the topping pattern almost, I mean, this is kind of what we were talking about even when I began the show here. You had this, I'm looking at the Spire now, but, you had this high at 609, that big volume bar to the downside. Higher volume trying, I think, to attempt to reclaim that level, and you've seen it, right? I mean, you had another high, I think, after that of 602.70. It just gives it up. It attempts it again. It's right under 600, and then just gives it up today. And that's kind of a weak market right there.
Yeah, and it's a weak market. Volume studies are just lean bearish. Advanced Klein leans bearish. There's and to clarify everything, we're going to need panic in the market. And if you look at today's trend, we got the market down a bunch, up 1.22, almost 1.25%, and the trend's coming in at 0.51. That's really a bearish sign. Sure. That implies that the market's going to keep going down until that trend gets up to 1.2 or higher. So when is that going to happen? I don't know, but I bet it happens around 575. I see. It'd be my guess, and so we'll see. But if you got a market down over 1%, you got a trend but 0.51, this decline's not done. Sure. So, but anyhow, that's that. Let's go to the gold market. We don't have a lot of time here. Absolutely. No. Yeah, we'll talk about it. Also, Tim, if you want to, I know we have a segment after this. It's a short segment, but please, I don't want you to rush through anything. If you feel like you can't explain it fully, please, you can come on to the last segment as well. So, all right. Yeah, we can do that. Actually, let's go to the bigger picture. Let's go to chart 5. Okay. So it depends how much time we have here. Okay. But the bottom window is the weekly GDX-GLD ratio, and it goes back to 2009. And I marked the times when this ratio got down to 1.45. Yeah, 1.45, which is basically where we are right now. Mm-hmm. And I marked those times in the past, back in 2015, 16 there. It did get below there for a while. That was basically the cheapest the market's ever been. And the market rallied strongly during that 2016 rally, went straight up. There's a lot of stocks that went from $1 to $10, 10 cents to $1, a lot of 10 for ones in that rally. Well, we're back down there again. So I'm thinking something, this rally in GDX is still in the early stages. The reason why, because this GDX-GLD ratio is at such a cheap level, going back, not quite 20 years, 15 years or so. So I'm thinking this is going to be extended rally, even though the market has pulled back here over the last couple of weeks or even longer, or a couple of months. I think this is just a pullback in an uptrend. And the reason why, because this ratio is so darn cheap. And previous times it's been this cheap. It's been a multi-month, if not a multi-year rally. Great. Tim, please stay right there. Folks, we'll be right back with Tim Ord for a short segment right after this break.
trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup, joined right now by Tim Ord. We have a short segment here, Tim. We're taking a look at the weekly GDX, the GDX of the GLD, potential for an extended rally.
Right. So, this is, again, this chart 5.
Yep.
This is an intermediate term bullish sign. So whatever's going to come out of here is probably not going to be short-lived. It's going to be, my opinion, multi-month, probably. And that's been kind of saying that all year, or for actually the last approximately 12 months. So let's look at the short term, see what's going on. Yep. That'd be chart 4. This is the daily inflation-deflation ratio. And the top window is the RSI for that inflation-deflation ratio. And when it gets below 30, it got down 27 on, I think it's December 20th, a couple of weeks ago. And since that's turned up. So I'm thinking this is at a low here right now, and it's actually been a low over the last couple of weeks. Market really hasn't come off the lows yet, but it looks like they probably will. So this next rally, I think, could be a multi-month rally. Mm-hmm. So the short term is giving a buy signal. Chart 5 was intermediate term. It gave a bullish sign. So we're probably starting a multi-month rally. If you want to look at the bigger picture, we'll go to chart 6.
Yep.
And that's The monthly charts. Monthly charts rule the weeklies rule the dailies rule the hourlies, da-da-da. This gave a buy signal back, I think it was March or May of last year. And as long as it stays above the both those indicators, which is the top indicator and the bottom indicator, stay above the mid-Bollinger Band, the uptrend is in force. And if you look over to the right window there, both those indicators have turned up. In my opinion, we're starting a multi-month rally in GDX.
Let's hope so. Tim, thank you so much. We're going to see you Thursday, okay?
All right, see you then. Thank you.